First day of macro here. What we're going to do is wait for these AM highs to get taken out. We have a downtrend happening today, so that would be the best scenario. Normally, I like to wait for this AM high here to have a high time frame for value gap. We do have a 15-minute in here, so it can be good enough. And we were hoping for a sweep here and then the retracement down. However, this could be the start of the expansion stage, because we've come down here and we've taken out this, well, not taken out, but we've gone down below into a discount range down here. So we'll see. I think it may want to come deeper into a discount range. But we do have this ranging that's formed. This range between the AM high and the AM low. So we'll see. You can see why this Nephew Sam FEG, like I don't have it in there because my eyes can't see FEGs. I have it in there so I can see them on a smaller time frame. And you can see that a 1 hour just appeared right here. Exactly what I wanted. I didn't have to flip through the times, nothing. So it's playing a slow ranging game today for sure. We came and took this little high out here. Maybe we came down and took this little low out of here. People who are confused in this range. Power three. So that's when you have this range consolidation, right? We're going to look for the sweep, the high or the low sweep, and that will be redistribution, manipulation, sorry, down or up, and then redistribution up, expansion. So obviously, in an ideal world, what we're looking for, like I said again, is for these AM highs to be taken. And maybe it happens in the, later macros. It's kind of nice about kill shot continuation model is that we can have this sweep here and we can take it anytime we want down. Right? It all depends if this wants to come deeper into a premium here. Into a discount zone, sorry. If it wants to come into this like way deeper. Or if it's already come back, redistributed, and now it's ready to have full expansion, like yesterday, we didn't take out external highs. So for those of you who think that getting in on this down candle here is a good idea, I warn against it. We are at a discount here now, so prices come down back into a discount. This is where reversals are possible now. So the trends are down. Let me switch to the 15-minute. We are down in this discount zone here, micro and macro. So let's get rid of micro. We're in a discount zone. Okay, trends are down, discount, reversal, possible. Okay, because we've come from the premium to the discount and the daily trends are up in the weekly, meaning when it comes into a discount, we hope it goes back into a premium again, right? Because it's bullish tendency on the higher time frames. It wouldn't necessarily work that way if we were trading a bearish pair on the daily. It still does come back to a discount or premium, just in a different way. For reversals, it would be a different way. It'd come back to a premium for a reversal, not a discount. Does that make sense? We have a bullish daily. The higher time frames are bullish macro time frames. Now that we have a potential reversal in the discount, I don't know. We'll see what happens here with this. What happens here? It might happen right here. We'll see. Let's look for other potential reversal areas. I have them marked in. But you can see this would be an external. Well, it's internal, but it's a daily previous low, major pivot point swing low. And it's a daily previous low. So we wouldn't be able to get into a trade unless it took this out right here. Right? It's major on the 1 hour swing low pivot point. So we can't take the buy off this and we can't take the sell. Now, let me explain to you a scenario where if the trends were on your favor like they are today, and it came up into here, stopped right in here, and then displaced over this low right in macro off the open, you can take it. If it's right off the open, sorry, in the first AM macro, and it immediately displaces in the low, only when price is in a premium for a sell, right? Now, I hope that makes sense because like if you're doing that displacement over the open low in the wrong zone, like in a discount zone down here, the odds of it reversing now are great. So this is highly improbable to take it off the open low. But if this whole kind of scenario here happens up in the premium and it displaces over the low here immediately, like you can go ahead and take it. I see it working all the time. Just not in this scenario right here. Because we're at a discount. So we're at a reversal point. We're at a place where price wants to reverse, right? So I'll repeat myself one more time here. Best case scenario is we come up, take out the AM highs in this 1 hour fair value gap bearish for the descent back down to take out the daily previous lows of yesterday, sorry. Okay, so as we head into the second AM macro of the day, what I would be looking for only as per the rules would be a redistribution sweep. Okay, so yes, it's come and take the AM lows right here, but it didn't really it was just trending down the entire time. You can't count that as a redistribution sweep. Plus the move upward was weak, right? Now in here, you can see we've broken these highs here. So market structure shift. We didn't really take the swing highs out up here, but this is a decent high. We closed above it and everything. So what I would be looking for is a sweep of these AM lows right here in this macro right here. So if it comes down, takes the AM low one more time, then we can start looking for a unicorn model silver bullet pie. But other than that, I am not going to count this AM low here as a sweep. It trended down. You look at that, it's gone. Anyone here thinks that we missed that? I like this kind of price action a lot, yeah. It's moving. I do this on my other monitor. For those of you that don't know how I do it, I will work on doing it some more. All right, let's switch over to the 15-minute to show everybody where to get prepared for a sell. All right. Look at that. So this is the kill shot range 50. That means we're 50% of the range, the entire range we're in backwards. So a lot of people know how to do it really well bullishly, but this is the bearish 50% of the range, right? From the last high to the last low down here. That's the range. You have the AM high right in here. You have this 1 hour fair value gap bullish that it may want to be returning to in here. You also have this one up in here. So ideally, we want it to come up into here, right here, and then give us a sell signal out because the trends are down. And I think they would remain down. So that would be an awesome sell on trend. And if we could take that, we would take it all the way down to the AM low potentially. I'd have to see what kind of structure builds afterwards. Because it is a potential reversal zone down here in the discount. So we take it to the top of the order block here, maybe. That's forming. We don't know if it's going to be high probability order block yet. But if it is, I would take it to here, not down to here. It's a little trick I have. No red folder today. Trump speaks at 2 o'clock. There are these, like we have a heavy fair value gap bias holding this price up right in here. So this, I mean, this could just keep going now and start. Well, that's why I put this here. We go into the expansion stage, right? Okay, so now that we have that, the other possibility right now, so there's a sell here. And because we're counter trend, this price here has to come down from here. Sweep the AM lows right now. And then we'll look for a unicorn model this way. So let's go back to the 1 minute and see what happens here. Yeah, so when things are counter trend, right, and you're looking for when things are trending a certain way and you're looking for the counter trend trade, you either need external, right, daily previous highs and lows, or you need this redistribution in here to come down. That's redistribution. So you have some form of liquidity that was engineered and then gone to fruition. Whereas taking this low right here was never really a sweep of the low, right? We had this, I mean, we did break it right here, see? So you could maybe count that the sweep, but to me, it was just going on trend, trending down into the deeper discount below this teal line. It wasn't an obvious sweep. And yes, it would have worked, but it was out of macro anyway, so it doesn't really matter. Okay, one thing I've realized here, this is your AM high, and this is the open here, and you can see how it sweeps liquidity to the left here a bit. So you can actually use for the kill shot continuation model that AM high to that AM low right there. And 50% would be here. And in that case, you want to use a high time frame fair value gap with no sweep to get in, right? So it's come 50% here. And what I had marked in, you see up here was the kill shot rate, the range, this entire range up here, 50%, right? So we could have a potential sell. Depends on where it comes out because uh, we have a tight range here, right? We wouldn't really take it past the aim low, even though it might come all the way down here to the daily previous low. That would be a nice sell, but we could jam to break even here. But I mean, the chances of it reversing are great once again because you're in a discount again, right? If this was shifted up into the premium more, and this AM low is in the premium, it'd be nice to take it all the way down into a discount range. So the potential reversal is down here. That makes sense. All right, so we're looking for a sweep of this AM high here. And it'd be paired with the bearish fair value gap. If it happens outside of the macro, we're going to do a continuation model with the kill shot. If not, we can take the unicorn model inside of here. This is considered a sweep here already. Reason being is it's a minor buy side liquidity. It has pretty big leg down, broke all these lows here. It's at the daily 50% as well. Above it, it's where smart money would want to sell bearishly. It already did once today, and it'll do it again if it needs to. Obviously, these AM highs up here and the kill shot range up here of the whole range is better. Sweep of minor buy side liquidity inside of a high time frame fair value gap, as in this 1 hour bearish. We've also tapped into this 15, this 5. We already have once. Problem is we have this 1 hour resting above it right here, but I've seen it. This would be good enough if it went down here to take it all the way to here on trend. Or we're now on a premium, and because we're leaving a discount, this could be expansion. We don't need a fair value gap bias for the continuation model, only for heavily counter trend unicorn model or the unicorn model in general. Although I'll let it slide when it's on trend, just the entry itself on trend. Like if it's completely bearish against you, I won't, but I'll let it slide if it's close. But most of the time, you need this fair value gap bias for the unicorn model. I'm going to go ahead and just say 100% of the time because you really do need it. And those circumstances where you don't, like, you have to really know what you're doing. So always have it. It works so well paired with the unicorn model. The trends just need to be in your favor and momentum for the continuation model. This is one of these things where, like, it doesn't have to take the daily previous low. It's coming to a discount now. It never came down and did redistribution like we wanted for a buy. We look for the sell on trend. Now, can we have to watch because, you know, expansion is possible now. And what does that mean? Well, leave a discount and now it has to come up and take external range up here. It's in the expansion mode. Needed some high time frame for value gap discount to rebalance itself, and now it goes potentially. And these trends could flip today, right? Expansion possible, trend flip possible. Once again, our only question is, are the trends flipping now for the day? Or are they going to come and stop everyone's parade that's in a buy down here, trying to hold it to the all-time highs or wherever, right? There's a long-term potential down here that I didn't bite on. Yes, the AM highs have been taken. That macro starting right here, so we can get in here on a unicorn model. Ready for a sell on this fair value gap that displaced?
Order submitted. Order filled. Order filled.
We're moving our risk from a $300 risk down to the last short-term high because we've made one short-term high, two short-term highs, and broke over it on that line right there. So now we move it 1 point off. We'll just take the range here. What you do is you grab your Fibonacci retracement. You go from your entry, which should be up here, but from here all the way to fruition. So 50% is here. Once it closes over this low here, we'll go to break even, right? So 50% of the range to fruition is here.
Order filled.